Hello everyone, good morning and welcome to my morning report chart appraisals with me, Rich Permark, Alistair Active Markets on Thursday the 20th of April. We've actually got some really interesting moves I think going on in markets at the moment because you've got sterling and the euro which are rallying, the dollar looking a little bit corrective. You had a slight dollar rally that we had yesterday as the treasury yield started to pick up. You can see that dollar rally just off the lows of Tuesday, as these treasury yields just started to sort of find a little bit of support. Now that is sort of interesting because that's sort of, I think this these sort of decline that we've seen in the certainly the 10-year treasury yield, this decline that we've seen in the last few weeks has really put this dollar under pressure, and markets are beginning to fall away. And that decline that we've seen in the 10-year treasury yield sort of coincided with this corrective move that we've seen on Wall Street starting to come through. And again, equity markets generally look corrective at the moment. Not massive selling pressure, I don't think, coming through, but just generally look corrective on a bit of a slide, on a bit of an unwinding slide, and that is sort of reflected in this Wall Street move that we're seeing in the S&P 500. And the dollar sort of is again slightly lower again today, so that's putting a little bit of pressure on, as I said, on the dollar, and also we're seeing the reactive moves on sterling and the euro today. So generally speaking, we're seeing forex majors sort of in consolidating patterns, although I suppose the euro and sterling have sort of broken out, but they're sort of consolidating those moves. And you're seeing similar style moves across dollar yen, across other pairs that such as sort of Aussie dollar as well. So it's interesting moves, I think, and you've seen the gold price, which had started to sort of pull higher again, but just consolidating slightly in the last few days. So just coming up with the uncertainty of the French election on Sunday, this is could see a bit of a sort of a sideways phase over the next couple of days as the markets just start to sort of look ahead to the implications of this French election, which is increasingly tight actually, and I think that's generally going to be a bit of a sort of consolidating factor in the next couple of days, but we could get a bit more direction next week. Now, in terms of our economic data today, not a huge amount. You've got Philly Fed manufacturing this afternoon, and also the weekly jobless claims. Philly Fed manufacturing at 25 expected, down from 32, and 242 on the weekly jobless claims. Now let me show you the Philly Fed manufacturing chart, which I always think these Fed indexes or indices are quite interesting. Certainly look at the huge improvement that we saw in the wake of Trump's election victory. That's starting to correct back, starting to unwind as the reflation trade is being questioned, and the possibility that Trump's not going to be able to deliver, or not going to be able to deliver as quickly as perhaps the markets had been anticipating. Interesting that the Philly Fed is expected to come back to 25 today. If that starts to undershoot, maybe to 20, underneath 20 perhaps, the market could get a little bit more nervous about this sort of unwinding of the Trump trade. So that's this afternoon, but in front of that I've got my chart today, which is the DAX. Now, I was speaking about the corrective outlook that we've seen on equity markets in the last sort of couple of weeks really. This is the DAX. You can see this this dotted blue line here. This is the latest uptrend that's been broken by that sharp downside move that we saw on Tuesday. Bit of a consolidation candle yesterday, but look at this downtrend that's starting to form on the DAX, and this corrective move within this sort of longer term uptrend channel. This is a corrective move that's starting to take hold. And it could be that, well, it certainly looks like that rallies are being sold into now. Look at these corrective momentum indicators with the RSI at 43. That's the lowest it's been since early December? Yeah, since early December. And MACD line's falling away, stochastics falling away. The pressure is on, and rallies being sold into on the DAX. So you've got this little bit of an unwinding rally today. And is this again going to be a selling opportunity? Well, you've got the overhead supply that's beginning to now kick in. You got that around that 12,050 level. That old low becomes new resistance. That is a level to watch. You've got these momentum indicators, which are basically just unwinding. Sort of mid 50s on the RSI tends to be limiting. MACD line's not even getting to 50 yet. Sorry, not even getting to neutral yet. And I think that rallies should certainly be seen as a chance to sell. You've got this 55-hour moving average, which you could argue is now a basis of resistance, or turned into a basis of resistance. That's up at the 12,100 area. So there is room for a little bit more of an unwinding rally on the DAX, but yet still I think it would be a selling opportunity. So I think we're still going to sort of correct back, and you've got this this old resistance which has become supportive around that 11,900 area. What was this low? 11,850 to 11,900 seems to be a basis of support now. So I think that could be tested in the coming days. But I think the French election will be an interesting one. That could create some positivity through the market. Certainly, if Macron is the victor, or certainly comes out strongly out of the first round of voting next week. So watch out for that. But for now, I think the DAX still looks a bit corrective, and we've still got this little bit of a trek lower that rallies keep getting sold into. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later. Thank you.